Okay, hi there, guys. Can you hear me loud and clear? G'day, Bobby, Peter, Daniel. How are you, mate? New face link should be good to go today. I think I finally sorted out my issues. Not that I still haven't got the issue, but we'll see how the stream goes today. I did some testing before, if you saw that. It should be all good. Didn't drop out at all. All right, can you hear me loud and clear? All clear, fantastic. G'day, Sharon. So I've got my hotspot hooked up again to my mobile. On the laptop and just got the TV plugged into the TV. So the screen you're looking at, or what you're showing is just off my TV. It looks good. Yeah, it seemed to be that even last week I was having issues with the hotspot. The sound, the speed's coming through is fine. It's really, really good. I think I actually had it hooked up still to the Wi-Fi through the other internet. So today when I actually tried to stream, I did a bit of a test run on the main computer. It still was still having problems. I think it's the upload. They're mucking around with something. The actual download speeds are better than they usually are, which is good when you're just watching the market and stuff. But when you're trying to upload during a stream, it just continues. It's just struggling and was breaking up even on my main computer. So I just couldn't get it to be settle in and remain steady. So yeah, all problems solved. It looks like it didn't drop out at all before for 10 minutes. So hopefully that continues today and we've got this problem fixed. So today, pretty obvious, I guess, what we'll talk about. We'll talk about the elections. This is surprise result that's got the market's pumped today. What are we up? 92. I think we cracked 100 recently earlier on today, up 100 points. Really took off on the open. So it's good to see. It looks like they were factoring a Labor government, an unfriendly trading government, and then the markets turned around because everyone was factoring in a Labor win, Liberals win, and then boom, up she goes. There would have been a lot of potentially unwinding of maybe short positions in a few stocks, along with buying into stocks that have been, I think, sold off the last few months in anticipation that Labor would win. Now they're getting loaded back into again. You can see the banks that really, we've got the banks up here. So we got Westpac up 7%. Look at that. That's massive. Westpac, CBA up 5.6%, NAB up 7%, ANZ just a touch under 7% was Bendigo. 2.6, that's lagging a bit. What's that doing? Why is it not working? I'm struggling a bit. That's not good. Westpac's, that's Bendigo, it's kicked on a bit. Westpac said that big gap up there, gap down and gap straight back up. So that was, I think, the dividend, wasn't it? Anyway, so it's a pumped market today. Diving in, we've had a couple of, we had one that gapped up on the open and triggered an entry, which I'm really just too slow to send an alert to hold off. But all in all, it's worked out okay. That's kicking off. That's doing nicely. Others, even the gold stock we've got with GOR, it's just going quite nicely today, which is good to see. So we'll go through a few of those today. We'll just have a look at some stocks, talk about the ASX, the overall markets, just the general stuff, I guess, and then we'll get into some shares. We won't muck around today. Just get into some shares that you want to take a look at. Oh, it's worth doing that. It could be a good little run in the market in the coming days, weeks, or in the ASX anyway. I think we're still going to be capped on what's happening with overseas with China and the US, as that potentially is what dragged the market south on Friday night. I think the market was doing okay when they were talking about, was it Canada, lifting tariffs on aluminium and steel for Canada, and the markets picked up just before the open. Then I think the talk on trade between US and China, I think it's CNBC saying that's stagnated or that's come to a halt. And then there was, I think, news headlines out of China, just negative headlines, which really triggered that bit of a sell-off into the market. Not a major sell-off, just giving up a lot of the gains that it made coming into the session on the futures anyway. So the market ended up down, just under 100 points in the Dow. What's that, 0.3%, 0.5% on the, I think it was at the S&P, the broader market, and then the Nasdaq was down over 1%. So it got knocked about around a bit, and that's on your typical trade war news. So it's really hard to deem what's going to happen there, because a couple of days ago they had some negative trade news when they increased tariffs. The market just took it in its stride, but now I think the biggest fear is that it's going to take a lot longer than anticipated. And then there will be a few more. They will be raising rates, another 300 billion in the US, tariffs, increasing tariffs, another 300 billion if that plays out, if they can't come to the table on some sort of agreement. So it's going to keep the market, we're going to get these sudden shocks on tweets when they get released. But again, it could be a bit of the market gets a bit used to it, because they know there's a tweet that would have shocked the market in the past. Maybe the market's just going to sit back and watch it for a while, knowing that it's probably bounce back the coming days if there is. So the market's kept on the upside, I'd say, a bit in the US, and potentially, just looking for, if there is a bit of a sell-off, they're getting bought back up again. So it's still, jobs are doing okay in the US. The economy's going quite strong. Potentially talk of raising rates, see how that goes, how that flows into the market over there. But overall, I think our dynamics have changed with the US a bit, because there'd be a bit of a flow into the markets. You can see that the way it's reacted today. You can even see the way it reacted on the overnight market on the SPY. If anyone looks at the SPY, we actually we finished up for the session, whereas the rest of the markets were down. Europe was down, US was down. So generally, or typically, our market would follow it down. And you might be looking at a 10, 15, 20 point move down on the open today. But because we had the elections, and it looks like the market was preempting something, they just didn't want to go each way overnight on Friday night, on the SPY anyway. It's really just waiting and see. They popped up, I think, any shorts that were in play on Friday, closed out on the open, and it was really just, they had a bit of a spike just after 5 o'clock when the market opened. I think it opens at 5:15 on the futures. Bit of a spike, and then they just sort of played around, didn't do too much chopping around through the European and US session when the rest of the markets were heading south. So it was interesting to see what that price action, even though you look at the open, you say, okay, from Friday's close at 4 to where the SPY closed, we're actually up slightly, 10 points. So it was interesting to see that when the rest of the markets were down. I'd say it's just a bit of closing out of potential shorts or longs. Everyone just squaring up before the elections, going off to the elections, and then seeing what happened on Monday. And as it's been with Liberals come in, so it's quite interesting. I don't know. I don't really follow politics at all, but I found it interesting to read a bit about it, saying that all the polls have got it wrong, and the totes, not the totes, but they said the Betfair and TAB have all got it wrong too. It was pretty much a landslide, not a landslide victory, I guess, anticipation for Labor. But it was a funny little thing that I heard somebody say. So most of the polls are done over the phone, not mobile, and the people that are ringing over the phone were obviously Labor biased or a bit older. And there was a massive, so it's a bit unreliable when most people are on the mobiles nowadays. We don't have a home phone anyway, so no one will be getting through to us unless they ring on the mobile. And I think the biggest swinging group was at 65 plus. So that goes a lot to say about what they're doing with franking credits, or potentially doing with franking credits. And when you got the biggest swinging group from Labor to Liberal was, I think, 65 plus age group. So it's sort of like, there you go, take that. So it's a bit of a surprise, and the market's just about to crack up 100 probably shortly. So what I'll do, I'm just going to get my charts organised now to see where I am. We'll go to the ASX. We'll start off in the ASX, see where we're at. That was a bit quick, wasn't it? I think this mouse is quicker than the other one. So you can see a couple of days of rally, end of the week, has taken us up and through that 6,400 mark. So we're strong today, very strong today. That's on your daily chart. Just get rid of some of this. Markets, the way it's going, it's powering on up. This could easily, buyers can get into sort of that overbought territory and really drag this market higher easily. I mean, it's got a lot of room to move on the upside the way it seems. if you go back to the weekly, you probably have to go back a bit further. We've taken out this high, which is good to see. And we were talking about the last few days, saying everyone who was getting bearish, a few weeks ago, we had this little pullback here, and the US getting smacked down. If you look at the price action, remember a couple of red days and a green day. If it was negative, you really shouldn't have buyers standing in the way, or a lot of buyers standing in the way to have a green day and then a couple of red days and a green day. Obviously, this day got rejected, you can see. But theory is, if the market's weak and we're all positioning the same way, that's just a lack of buying pressure coming in, and the sellers are going to slam it down. And if the fear starts kicking in, they're going to slam it down hard, and it's not going to get these sort of rejection candles you got here. What was this on the 6th, and then again down here on the 8th, and then this sort of rejection as well. It slammed down and rejected on the 14th, and then after that we just pounced back up. So you can see this action, was the action down was intermittent, and it was sort of punctuated by a couple of up days, which is good, which is something like is sort of the reverse of what we saw here. We saw the market slam down, and then it was grinding back up again. So if it's going to grinding back up here, and then we got this sort of reaction, if it was, you would have expected something similar here. So when it's grinding down, it hasn't broken any anchor to this uptrend. It's just tested that 6,200 mark. Then the risk is, we were seeing there's going to be some short stacking in, getting negative because they're reading the news, and that the tone was negative then, even though the market wasn't showing you the same signs to say what the news was saying. And then the market, the shorts that have been stacking up, getting squeezed out. And that's pretty much what's happened the last few days, and especially today. I guess stops would have been placed if you're on the index, or if you're trading short into the markets. Your probably natural stop would be above that 6,400 mark, which is blasted through today. So if we go now, just looking at that's your monthly chart, and this is the uptrend since basically the capitulation through the GFC and that bounce, and we've got this. The trend has really just started from back in 2011. I know it bounced here, consolidated, potentially going to go low again once you put in that higher low, and this inside higher low here back in 2012. The market's been steadily grinding high, a bit of a sell-off once we got a bit ahead of ourselves at 6,000, bit of a sell-off here, and then we bounce back up, and we've got this potentially is just that secondary leg up, or you could argue that this contraction here, or this pullback, this major pullback through 2015, that's your next leg up. The next leg took us to 60, say 64. What was those highs? The recent high that we just blasted through, 63.73. And this pullback into the end of last year, that really washed out a few buys as the end of this leg up, and we're starting a new one. If that's the case, then you would expect a good strong start, then a few pullbacks, higher lows, holding something like this, and then something like this again. If that's the case, when you can't argue that the market's getting a bit ahead of itself, but this could be just that blast off. It could easily take us from here just straight up over next few months to the all-time highs. So we could be, I'm still a bit of a believer that we're going to be trading up there sooner rather than later, maybe. Or maybe towards the end of the year we trade through the all-time highs and then just see where we're situated. Yeah, so I'm just reading your comment then, Peter. G'day, Gino. So yeah, that's the theory there anyway. And we've just bounced off on the weekly. We've just touched on the MAs here with this little pullback the last few days, and we're bouncing back up. So that's, that trend is up on the weekly, especially from the start of the year. This longer term weekly trend, this is more of your corrective price action, and then we're straight back up again. It doesn't have to be a move up. We talk about, I don't like the V-shaped recovery, but the fact that maybe that was overcooked into December, maybe the reason why we punched up like that, and we just come bouncing straight back really hard. It got a good start to this, at the start of the year when volume was light, and holding these high lows since then.